Did you feel that? A silent move, but a devastating one. The global reset is no longer a theory. It's underway, and it's going to hit your wallet directly. New tariffs have been announced, markets have crashed, and a new financial reality is emerging. If you don't understand what's happening now, you could lose far more than you realize. So go ahead and hit the like button, share this video, and subscribe to the channel. Because today, we're going to reveal what no one else is telling you. The announcement that shook the world. Imagine waking up to find that overnight, everything got more expensive. A sudden shift in the economic landscape, without any chance to prepare. That's exactly what happened when the new tariffs were announced. A political decision that hit everyday people right where it hurts. Wall Street tumbled, with losses over 5% in just 24 hours. Spooked by the threat of a recession, investors rushed to safer assets like gold and government bonds, while major corporate stocks plunged. The uncertainty spread like wildfire, dragging down stock markets across the globe. And the official estimate is even more alarming. American families are expected to pay about $5,000 more per year for basic goods. And it's not just luxury items. We're talking about food, clothing, electronics, even medicine, directly affecting people's standard of living. These tariffs are aggressive and highly targeted. 10% on all imports, with specific surcharges, 34% on products from China, 46% from Vietnam, and 20% on goods from the European Union. It's a drastic reshaping of global trade that's already impacting prices, jobs, and investments on a worldwide scale. Quick analogy. It's like going to a grocery store day and seeing everything 10% more expensive. But tomorrow, it could jump to 30% without warning, without time to adjust. And worse, no guarantee the price hikes will stop there. This initial shock isn't accidental. It signals the beginning of a new economic era, where every political decision will directly impact your everyday life. The global reset isn't just a shift in the environment. It's a complete change in the rules of the game, what they tell you and what they don't. Officially, the motivations behind the tariffs sound noble and reasonable. The government says it's about protecting national security, bringing manufacturing back to the U.S., and strengthening local supply chains. In times of global crisis, controlling your own production is indeed a clear strategic advantage. But that's only part of the story. Economists warn that, in the short term, the inevitable result will be higher inflation, with prices rising across multiple sectors. And when the cost of living climbs faster than wages, people lose purchasing power and see their quality of life deteriorate. On top of that, these tariffs could easily ignite a trade war. Other countries, frustrated with the American measures, are likely to retaliate by imposing tariffs of their own, triggering a chain reaction of trade barriers that could stall global growth. A major flaw in the process. The tariff calculations only consider deficits in goods trade, ignoring massive U.S. surpluses in sectors like tourism, education, and financial services. These industries generate billions of dollars that help balance out the trade deficit, but they were conveniently left out to justify steeper tariffs. What does this mean for you? That the narrative of national protection could be little more than a smokescreen for a much riskier strategy, with consequences far beyond the noble intentions being promoted. The economic chess game behind the tariffs. Now, let's get to the heart of the matter. The method used to set these tariffs. And this is where the inconsistencies become even clearer. Instead of focusing on reciprocal tariffs, meaning matching what other countries charge the U.S., the strategy was based solely on gross trade deficits, ignoring sectors where the U.S. is highly competitive. This approach distorts the real picture of trade flows and paints an artificially negative view of the trade balance. For instance, in tourism, the U.S. enjoys a massive surplus, earning billions from foreign visitors each year. The same goes for international education, with students from all over the world paying to study at American universities and financial services, where Wall Street exports expertise and technology globally. These surpluses were deliberately ignored when calculating the tariffs. The result? An exaggerated picture of imbalance, used to justify disproportionate measures. Plus, the tariffs imposed are much higher than what's typically seen in trade disputes. The criteria for selecting which products to target have been widely criticized by international experts as arbitrary and mathematically questionable. Quick metaphor. It's like checking your bank balance by only counting your expenses while completely ignoring your income. Obviously, your balance would look catastrophic, justifying extreme actions. Conclusion of this section. This wasn't a rash decision. It was a calculated strategy designed to put specific pressure on key sectors of the global economy. The power strategy. Who really wins from all this? Now we reach the most intriguing and least discussed part, the real objective behind these tariffs. Many analysts suggest that the tariffs aren't just about economic protection. They're part of a broader macroeconomic strategy designed to trigger a controlled recession in the United States. The hidden plan. By pressuring the economy through tariffs and inflation, a deliberate slowdown will be created. This would force the Federal Reserve to step in, aggressively cutting interest rates to stimulate growth and prevent a deeper recession. With lower interest rates, the U.S. government will be able to refinance its public debt, which is currently at historic levels and about to surpass $9 trillion. This move would lower the cost of interest payments and free up resources for other strategic areas. Practical reference. Throughout his business career, Donald Trump skillfully used the strategy of buying, renovating, and refinancing properties during periods of low interest rates. It seems the same logic is now being applied on a national scale. Pressure the system, then restructure it to your advantage. This strategy would aim at three main goals: drastically reducing dependence on imports, promoting a new wave of industrialization in the U.S., creating jobs and strengthening the real economy, solidifying the dollar's role as the world's main reserve currency, expanding America's economic influence even further. In short, if this strategy succeeds, it could redefine the global economic balance for the next 50 years. But if it fails, it could trigger an economic crisis of historic proportions. What great minds say. Insights from Ray Dalio. To better understand the risks involved in this process, it's crucial to listen to some of the brightest minds in economics. Ray Dalio, founder of Bridgewater Associates, warns that tariffs act as double-edged economic weapons. They are deflationary for the targeted countries, which sell less, but inflationary for the ones imposing them, as local products become more expensive for domestic consumers. This creates the risk of an extremely dangerous situation called stagflation, when economic growth stagnates while prices continue to rise. One of the worst possible outcomes for any economy. Quick example. It's like trying to run a marathon while tied up. You're spending energy, making an effort, but you're not moving forward. And you still end up exhausted, with nothing to show for it. Dalio also highlights that, despite their short-term pain, protectionist tariffs can be powerful tools for strengthening a nation's internal resilience. In times of global crisis, those who control their own production and supply chains have a decisive advantage. The main takeaway: the global economic game is changing, and those who don't adapt will be left behind. What's next in the global reset? We're undergoing a true high-risk economic surgery. And like any major surgery, the process involves pain, sacrifice, and a long recovery time. Yes, there will be pain, higher prices for essential goods like food and energy, a possible increase in unemployment in certain sectors as global supply chains are restructured, intense market volatility, with rapid cycles of optimism and panic. But there are also huge opportunities. Reindustrialization could open the door for technological innovation, new jobs, and the rise of new economic sectors. Companies that adapt quickly could become giants in a newly strengthened domestic market. Final reflection. The current system was bloated, heavily dependent on fragile external factors, and increasingly unsustainable. This painful correction could paradoxically pave the way for a new era of sustainable growth. What does this mean for you? Keep your investments long-term and diversified. Avoid emotional decisions during moments of panic. Great fortunes are made in times of crisis by those who act wisely. Strengthen your financial education. In times of uncertainty, knowledge is your greatest asset. The global reset has already begun. It's not a theory. It's not a forecast. It's the new reality already shaping the world's economic future. The road ahead will be challenging, but also full of opportunities for those who are prepared. If this video brought you value, like, share, and subscribe. It helps more people get ready for what's coming. Remember, the future belongs to those who understand the changes and act wisely.